Good afternoon, everyone. Jason here. Today is August 1st, and this is your aftermarket update. So I want to spend just a couple of minutes here with you today talking about one of our trades here today. Talk to you a little bit about a big picture perspective. We put out this weekly market analysis yesterday, and we've been putting, we've had one of these particular levels here highlighted, and we got really close to that level today, so I wanted to spend just a couple of minutes talking to you about that. And then a little bit about the trade that got us there. So if you go to, let's just do this from the beginning. If you go to oiltradinggroup.com, you'll see that we have lots of blog articles and things of that nature on the site here. Scroll down, etc. Most of you are familiar with this site. But one of the things that we do each week is we provide you with a weekly analysis, what we kind of think is going to be happening as we head into the next week. And you could see here that there's several weeks here. And if you go back to this week of July 4th, we're going to pull that one out here since that's the last one that you see here. That's when we first really began talking about this descending triangle. Price had been rotating around through this descending triangle. And this is your analysis through the week of July 4th. If you move up a week to the week of July 11th, it's really where we began to define the breakout of that descending triangle. 39.68, we've been calling for this level for just about a month. And finally, let's just go back here to the week of August 1st here. And this is the area, and you can see how the market from the 4th to the 1st here, the market has really been in this real downturn, and we've been targeting this break point here, this break point of this descending triangle. We've been targeting it down there at 39.68 for just about a month. One of the other things that we pointed out here on this weekly analysis is we have an interesting pattern repeating itself, and we talked about this as is history repeating itself. And you had a double bottom in January to March of 2015. Then you had a 14 bar. This is a weekly chart. You had a 14 bar rally, and then mid-August you came down for 98 days. You had the 63-day fall all the way down here fell all the way down to this 39.18 area. So double bottom, fell all the way down to 39.18, a little bit of a rally, and then again, January and February, you had this double bottom. It's a little bit hard to see here, but this red bar right here is on this, it's kind of obscured here a little bit by this drawing, but double bottom here. This was January, February 2015. Sorry, this January, March 2015. This January, February 2016. Then you had a 17-week rally. This was 14 weeks. Then 119 days. This was 98 days. So again, 3 additional weeks. Big rally into June. Same thing here into June. And then the market is on this move and trajectory to the downside. Now, what this is calling for is a $29. If it was to take the same 63 days that it took here, you would be looking for a $29 target. Obviously, $29 is a big fall from here. It won't happen. It's projected out for August 8th. That would be a week from today. I don't expect that we're going to drop $10 in the next week, but it does give you an idea that we do have a pattern that's repeating itself. And then at the end of August, you had a small rally before you sold off going into the end of the year. So we're going to be watching for this. But really, the big important thing here is we've identified this descending triangle, the measured move for this descending triangle. And here, I'll do this for you. We'll take this chart. Here's how you come up with this measured move. So basically, you had a triple bottom here, right? That was providing support. And then you had this trend line to the downside. All you really need to do, and all that I did here, was I just took, right? You took from the high point of this trend line down to the triple bottom. So you measured from here down to here. And then when it breaks, which was right here, you simply move that and gives you that target of 39.68. Now, you're talking about a daily chart here. Today's low was 39.82 rather was today's low, 39.82 before you rallied back up to 40.07 here. 40.08 is where we are right now. But you're in a nice, well-defined bearish channel. You broke the consolidation range, and you have gotten to you got to within 68 and 82 is 14 ticks from the target. So it's taken a while to get here, but this is something that we've had our eye on for quite some time. We've talked about it in our weekly analysis, so I would encourage you to go back each week and take a look at this weekly analysis as we provide the information to you on Saturday, usually Saturdays, as we go through it. Now, let's talk about the trade that we got into today. Okay, so there's a trade of the day. Our trade of the day here is going to be, well, let's get a different chart out here. It's still our market maker levels chart, but I want to get the 5-minute chart out here for you. Okay, so here's your market maker levels chart, and this was our market maker levels helping us get into this trade today. So we took let's go back here a little bit. Oh, I'm jumping around a little bit here. One of the other things that I wanted to share with you is, and this is important to keep your eyes on, generally the ranges on Mondays and Tuesdays are really low. So these blue sections here represent the RTH trading sessions, regular trading hours. So this is the 8 a.m. 60-minute bar, and that's the 2 p.m. 60-minute bar. So basically we're just measuring the range within there. 59 ticks last Monday, 77 ticks the Monday before that, 155, real big moving day on Wednesday, and that kind of gives you the idea. Also, one of the things that we talk about in here quite a bit is that the higher low for the week will be made on Monday or Tuesday. And so this was Monday, the start of Monday, and of course that was the high for the entire week, giving you this nice long run to the downside. So if today, if the high on today, which was 41.88, and if that was the high of the week, then we could be expecting more to the downside here as we make our way through it. Okay, so let's talk about the daily structure signal here. So as the market opens up, these are your market maker levels. As the market opens up today, we had a very interesting formation setting up. If you measure, let's go back here. If you measured the previous Friday, this is Friday's low, and you measure it up to yesterday's or today's high, which happened in the overnight session, you get to, let's turn these off for a second. Okay, so you get to our favorite retracement point here, which was 96. We came all the way down really to 88 here. We came down to 88. But you never really got much in terms of traction, in terms of closing bars underneath that 70.5. So if you had gotten in long at 96, you'd have put up with 8 ticks of heat, and it would have given you a rally for 96 to 32 is 36 ticks. And it came back and kept testing that level. So once we got into the open today, which is where the daily structure signals form up, you can see that we had our daily structure signal here was at this 96 level, and we had this bouncing back and forth through here, right? Once the market broke down through that, we were looking to target down here to this 40.57. We took a small trade this morning on the break here and closed below this structure signal. That's not the trade that I'm going to show you, but we did get a small winner off of that. And then we took, once the market, again, market maker levels here, we teach you how to draw this stuff and do it on your own. But we had a revision signal. Okay, so you see, I'll spread this out just a little bit so it's a little bit easier to see. These lines represent the cycles or the time cycles in which these levels form, right? And so today we had a revision signal here that formed up right there, and this gives you a opportunity for a first-time touch long. That was at 76. The market came down to 70, and it rallied up to 94. Okay, so I tried to get in long here. In fact, if you were in the room with us today, you know that I got hit but no fill at 76. I tried to move it up to 80 to try to get in where all this price action was here. It missed me and ran all the way up to this revision mid. Now, that was counter trend, so I take smaller targets on counter trend type moves. That's the idea. Take smaller targets when you're counter trending, bigger targets when you're looking for the trend. We got in short up here, and that's where we'll pick up the OTG trade of the day. We went from revision signal to revision mid. I get in at 94, one lot at 94, one lot at 95, and it got to 97, was as high as it was. and then the market comes down, and we were looking to target that revision target down here at 57. You're going to actually see we get really close here a couple of times, and then the market will come back and take me out right up here around this 71, 72 area. It's actually on this thrust up to 78. The market takes me out. I'm at 73. And then you see it was 2 bars later. It comes all the way down. It takes out your revision target. Now, the market continued to move. I ended up finishing up at that day again. If you remember, I showed you what last Monday's looked like. I showed you what last Monday's range looked like. So there's no guarantee that we were going to have a big range. It was only 55 ticks in the RTH session last week, so I didn't want to get hung up, giving anything back. But the market did go ahead and push on down. We got down to the revisions to the daily structure signal, and then we finished up tagging into your market maker level. These are all first-time touch areas. If you're playing them and you're kind of in context here, you came all the way down to the market structure extension 1. That also happens to be an area that we look at, which is, we'll turn on the secondary levels for a second, and you can see here that at this 28, you had the 1.27% range extension. You had your daily S2, which is a standard pivot level, and then, of course, you bottomed out at the 161.8, and that's why these levels are on here, because that's the pattern that the market tends to follow, goes through these range extensions from Friday's trading range. Okay, so again, lots of information here. The bottom line is we have been watching on your weekly technical analysis. We've been watching specifically for this right here, this triangle break to get to your target down here. And I believe I said in the room I didn't think it would get that deep when we were trading around 40.70, but it did, right? It ended up getting down that deep. And so tomorrow we'll look for it to take it out, and then we'll be looking to possibly extend this range, this consolidation range here. You've got some price action levels. You've got a structure point here, a structure point here at the top of this consolidation range. And so we'll extend these areas out and put them on your trade plan for tomorrow. So again, I'm going to let you watch today's trade of the day. It lasts about 20 minutes, and it will give you a sense of how we managed that trade off of your market maker levels. And I will see you on the other side. So again, without further ado, here is today's OTG trade of the day. And I'm in short here. It was quick. I'm in. So we're anywhere in this area would be okay. 104 long at 93. 03 is my stop. Anywhere in here is okay. We came right up to the daily structure signal again and stopped. So we need to get another move down. We get down to 88 and not able to get through it, then I will take one out. If we get down to 90, down to 88 and can't get through it, then I'm going to go to break even on the stop. If we get to 88 and can't get through it, I'm going to go to break even on the stop. 100 limit orders long at 88. Remember, 93, 92 on our initial move to the downside here. This, by the way, is the revision mid right here. So you go revision signal to revision mid, right? And if you can't get up to the revision target at 33, if you can't do that, which at this point we don't want to do it unless we get a target down below, then you're looking for the revision target again down to 57. There's 90. Let's go 89, 88. Okay, there's 90. There's 89. Bring the trail stop here to break even now. That's close enough to 88. I said I would bring it to break even at 88. That's close enough. Break even on the stop here. It's a little bit counter to what's been happening, but you came right back up to your market maker level there at 96. And now we're looking for this thing to push underneath here. So again, I'm going to take one off at 84, and I'm going to let one run. There's 87. Bring the trail stop here to 93. Break even plus one. Again, I'm anticipating 88 being a problem. And it is behaving as a problem right now. 100 limit orders long at 88, another 100 at 85, another 142 at 83. These are all limit orders long. There's 88, 87. Come on, get underneath it here. Gary, when you say cutting in and out, is it like this? And then it comes back like this? Something like that? There's 87, 86. 84 is the target here. If it's fading in and out, sometimes I'm moving away from the microphone. If you're having like garble or static, there's a red X in the top right-hand corner of Omnovia. And click that to reload, and it will be... if you reload it, then you may get that may refresh your browser with it. So there's 86. You've got 100 limit orders long at 86, another 100 at 85. So I'm looking to target 84. Stop is 93. Yeah, if it's going out completely on you, Gary, then just hit that red X at the top and reload it in your browser. Reload the application. That may help. So we've been down to 86. My first target one is 84. We may not get there. Like I said, if we get to 88 and stop, which is where what we're doing now. There's 86, 85. Come on. Get on through that 85 to 84. Give me that target. Boy, I was just about to take it off at 9 ticks. But I'm going to let it stay here now. If we hit 85, I may take it at 9 ticks and just bring that, and I'm at break even plus 1 on the other one. That would be, there's 84. Okay. Atta baby. All right, stop, trail stop now here, 94. So I had one in at 95, it looks like, and one in at 94. And so stop here is 94. Break even plus 1 at 94. It's a battle today. But that's okay. As long as we're on the right side of the battle, that's what matters. $94 on the stop. 88 is that key level here. So again, really, even though we've had a little bit of action, the high has been 18 down to the low at 70 is 48 ticks, low to high, since the open. And again, go back here to your weekly. Just understand, here is last week's Monday, right? This is Monday's range, RTH session range. 59 ticks total for the entire day. And when it was only 77 on Tuesday. Also, this is another week where the lower high, in this case the high, was made on Monday, right? This is the high of the week. So we could be putting in that little rally. Again, if we're going to maintain this bearish idea, this high up here could be the high of the week. 41.88 could be the high of the week. It's very possible, right? So we won't know until we know. Time will tell, of course. But the point of all of that is this, that if that ends up being the high of the week or begins to set the tone, and we are in a bearish mode here, right, that could be setting the tone for the week. I'd like to break back down underneath, keep closing underneath 88, and then start to close underneath that revision signal there at 76. So your market maker levels are best, right, when you are in a bit of a range. They work the best in a range, unless you've gotten in on the right side, of course. then you can ride them on. But if you're playing end to end like we did here, we played the revision signal up to the revision mid. We got short. We got 10 ticks, right? We took structure signal down to really came down into the market structure signal, which is at 68. This is 70. We got down to the low at 70. The point of that is this: if you think about what those old time S&P pit floor traders, the way they traded, right? They weren't looking for huge breakouts. They were big lots scalping, right? And so these levels were designed by a floor trader, and that's when they are at their most effective, is when they are bouncing back and forth. So when you are in a choppy market or a bouncy kind of narrow-ranged market, that's when these things work the best. Now, that's not to say they don't work in a trending market, but you have to be in the right idea of the trend. Like here, we're 94 short off the revision mid, and I feel like we could hang on to this because we're getting in sync with the higher time frame move. It's why I was trying to get long at that 77, and I would have liked to have ridden it up to the revision mid. I got hit but no filled there, and it rallied up to 90, whatever it rallied up to, 96, 97. Okay, there we go. All right, targeting 57 down here. That's the revision target and the revision signal. Trail stop here is 88. For now, it's 88. I'm going to look to target 57 down below. That's the structure and revision target. So that is my target down below. We'll see if we can continue the break here. You need to close somewhere underneath 79 or lower. And 57. So you just came right back down again and found support right there at your revision signal. Again, these are on your 5-minute chart. These are best plotted on your 5-minute chart. There's your revision signal here at 76. Market structure signal down here at 68. And then you have both structure target and revision target down there at 57. And that's where my final target on this move down from 95 is. It's 57. Come on, 73, 72. Bring this trail stop down to 83. That's 12 ticks down to 83 on the trail stop. Let's see if we can hit through the low. Remember, 68 is where your market maker level market structure signal is. Daily structure target at 57. Previous session low at 57. Revision target at 57. You need a bar to close underneath 76 in order to really bring that 57 into focus. There's 68. Bring this trail stop down to 78. 76 now on the trail stop. And we are 57 as a target down below. $128, $122, $102. You have lots of liquidity underneath you here. Bring this trail stop right now to 78. Just because the revision signal is there at 76, it could come right up and tag that before it continued that push down. Or it may, that's 20 ticks off of, it's not quite 20 ticks off of the entry. Bring this trail stop back to 82. Sorry, 15 ticks to 83 on the trail stop for now. I'm going to try to stay in this down to my target. You have 119 long at 66, 142 long at 65. So down to your market structure signal, daily structure target, that's this green line here at 40.57. That also corresponds with previous session low. That should find support. You should find some support down at that target. If not, it could come down into $40-ish, in that neighborhood, somewhere down in there. Bottom of the hour in 7 minutes. Keep pushing. Let's go. 100 long at 69. 123 long at 66. 127 at 65, et cetera, et cetera. So you've got volume down here protecting. Limit orders long. providing support down here. And again, we came right down to the market structure signal, which is at 68. Really found support there. But now I believe we're going to try and get through it here. If we get down to, let's say, 60 and can't get through it, I may just close it. Okay, you've got quite a bit of volume down there at 60. 57 is close enough to 60. I might just close it there. Bring this trail stop now down to 78. Come on, get through 69, 68, muscle through. There's 69. Let's go 68, 67, low. 68 is where the market structure signal is. We're having trouble getting to it, getting down to it, through it, and to it. $69, 68. There we go. Now 67, 66. Okay, having trouble getting through the market structure signal, your market maker level support. Not a surprise. There's 67. Bring the trail stop now to 75. So really, your 9 ticks down to 57 or 9 ticks up to 75. That would be 20 ticks. You have 114. Make that 77. Sorry, 77 on the stop. 77 on the trail stop. Revision mid there at 76. Come on, do me a favor and keep me in instead of just tagging me out to the tick. How about we keep me in by a tick instead this time? Maybe we do that. That'd be a nice novel approach. How about we keep me in by a tick? There we go. 71.70. Come on. Get underneath it. 66 is the low. You know, I feel like bringing this back up to 82 behind that big line at 80 where there's been lots of activity around the 80. But, man, as soon as I bring it up to 82, that's where it'll take me out. And if I bring it up to 83, that's where it'll take me out. It'll be one of those kinds of things, right? Where wherever, no matter where I put it, it'll just probably snag me. So in this case, this will put me up an even 50 ticks on the day, which I'll be happy with for a Monday. So there's 71. Let's see if we can muscle our way through. You've got 2 minutes and 15 seconds till the bottom of the hour. Well, come on, get underneath 70, 69. You need to go test that low. You've got liquidity now at 68. Go figure. That's where your market structure signal, market maker level, is providing support. Also, on your revisions, on your 5-minute chart, you came right up to that revision signal. That's where you found resistance. Now let's see if we can go take out the target at 57. That's why my stop was at 77. The revision signal is at 76. So there's 69. Let's go 68, 67. 113 long at 69, 68. We'll see if we can get underneath it here. Bottom of the hour in 53 seconds. We'll see if that gives us a little bit of energy to take out our target. If we get to 60 and can't get through it, I'm going to close it out probably. I'm not going to mess around with 3 ticks. There's low down there at 67. You're double bottoming at 67. The low is 66. So came down to the low again. It couldn't quite get through it. 1 tick off the low. $137 long at 70. Lots of volume underneath you here. Trying to provide support in the form of limit orders long. $111 short at 74, $111 long at 70. This is your battle zone. New bottom of the hour now. Okay, those limit orders long at 70. There we go. We got through them. Now let's go test 68, 67. See if we can hit through the low down there at 66. 67. Get through 67. Don't stall. Lots of orders at 66, providing support. If we can get through 66, we'll make it all the way to 65. $109 long at 66. Yeah, never gets old, does it, Wayne? If we go all the way through 66, we'll hit 65. There's 64. 73 on the trail stop now. I still think we'll hit down to that level. All right, on my raw support and resistance levels that I use for my calculations, we came 63 is support, right? We're down at 64. 63 is support here. That is a raw calculation that I use. So again, we're at 64 is a level here. 63 rather is a level. We've got support. So somewhere between here and that 57. Bring this trail stop down to 72. Just don't know that we're going to have enough energy to finish it off here. I have a support down there at 64. What I don't want to do is have it rally back up to 77 or back up to that 80 level and then have me miss out on some ticks here. So I move the trail stop down to 72. See if we could get through the low down there. There's 67. Low at 64. I have a level at 63, a minor level at 63, but it's behaving. It's really the market structure at 68 that's kind of holding it up here right now. You've got a new revision signal at the end of the next bar. Not this bar, but the next 5-minute bar. All right, and there we go. So that puts me up about 56 ticks today. So I think that's what I'm going to call it a day. All right. So you saw that we were trying to reach out for that 57 level. That was previous session low. Also happened to be where both of your revision targets and your structure targets ended up being on your chart today. And so we were really looking for the market to try to come down into those areas, and ultimately it did, right? I think it was a couple of bars after we got stopped out. Had to make one more rally, of course, stop us out, and then ultimately went down. But it's still a really good day, and it is the kind of day that you like to have, right? A couple of trades, no losers, not a lot of heat, and off we went. Again, it's I wasn't quite expecting it to move down to the 39.68 today, but ultimately it did. And we would have kept trading had we known the range was going to be a lot bigger, but there's really no way to know that. And as like we said, if you look back a week, like I showed you, if you go back and look back 1 week, the range on Monday was 55 ticks for the entire session. So we had a bit better day today. In fact, the total range on the day is 206 ticks. That's about 75 ticks more than the 10-day average. And so, again, very active and very good moving day. We like that. And we had a good day as a result of it. So, as always, I want to say thank you for spending time watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.